be more open to the questions if you have any, and I would like this session to be more interactive rather than one-sided. So please feel free to stop me anywhere, or if you would like to ask me anything, please feel free about it. So, inshallah, I will be talking about digital transformation in Islamic finance. But before that, let's start with a conceptual framework of what is digital transformation in Islamic finance, what is fintech, and is there any difference between the two? And then we will see that like how we can explore the landscape of Islamic fintech, inshallah. So just back to basic first, that what is digital transformation? Uh, I'm being a researcher and also became being a semi-academic, I would say. I would like to basically focus and emphasize on the right use of terminologies and also the concepts behind them. So let's see the proper definition first, and then we can talk about it later. So digital transformation is the process of using digital technologies, to fundamentally change the way an organization operates, delivers its products and services, and interacts with its customers. So, which means that we are talking about a fundamental change over here in an organization, whether it is a bank or a takaful company or a capital market company, I mean like product or service, that how they are offering their products and services to the masses and interact with their own clients and customers. So this is about digital transformation, and it in this arena we have fintech and AI, particularly artificial intelligence. These are the most disruptive technologies in the financial industry right now. And I believe that they have the potential to revolutionize Islamic finance as well. It can shape the future of Islamic finance. And we will see that like these two technologies can change how the Islamic financial products and services are being delivered to the masses, and how people will interact with these products and services. We are already seeing the change right now, and inshallah, in the future, we will see more changes being occurred, and these changes are for the betterment of Islamic finance industry as a whole. So what are the key drivers and benefits of digital transformation? This is one of the question which basically pops up in my mind. Is it like basically a trend, a buzzword that everybody wants to have digital transformation? Everybody wants to basically incorporate it somehow. So Islamic finance industry should also do it. This is the main question, or they can do the business as usual. So this is one of the most important questions. And I believe that digital transformation and fintech can actually deliver a real value proposition. So what are the key drivers? Number one is like there is an increasing demand for digital banking services from customers, because right now customer behavior is also changing. Not everybody does not want like anybody or all the customers and clients, they do not want some standardized products. They want some customization, and they want these customization within the products and services uh, at the very higher level of convenience. So because of that, I think that there is a high demand for digital banking services, for example, and then the need to reduce cost and improve efficiency is vital component. Why? Because right now we are Islamic finance, whether they are banks, takaful companies, fund management companies, and other financial institutions, they are in a tough competition. There is a cutthroat competition in the market, and they not only have to propose a halal and Sharia compliant solution, but at the same time, it has to be efficient in terms of cost and delivery. So the need to comply with the regulatory requirements is also another vital key driver for Islamic fintech and digital transformation. And there are a lot of opportunities to create new products and services. Right now, I will be talking about this point later in my slides and presentation, because I truly believe that there is a dire need of innovation and invention in Islamic financial products and services. So far, we have been replicating conventional products, although like it's a good milestone that we have achieved. And I believe that like it's a remarkable step towards Islamization of Islamic finance or financial and banking sector. But we really need innovation and invention at the same time. And then we have benefits. What are the benefits? If you ask, like improve customer experience, because they need higher level of satisfaction overall in the whole world. At the moment, if you see the level of satisfaction for customers and clients have been increasing uh, overall globally. So like your expectations are higher as a customer and client. And if those expectations are not met, then you are disappointed with the level of quality of services. So I think improved customer experience is one of the benefit which we can achieve through digital transformation and fintech, and increase operational efficiency is also there. Of course, like it will also reduce the cost of the delivery of those products and services, and enhanced risk management is also there, because right now I would say that like the complexity of the financial products and services has also demanded that there has to be an enhanced risk management approach towards those, because the complexity has also increased the risk at the same time. And of course, like through digital transformation, the benefit is that like we can have increased innovation. And I will be talking about it later in my slides, that how we can do that. So, but before that, I believe that we have to also understand each terminology when we are using it, and what is the concept behind it, and how they are differentiated between among themselves. So first of all, we have digitization. So what does it mean to have digitization? It is the process of converting analog information into a digital format. So this is something which is very, very basic. For example, when you are having paper documents, like paper-based manual hard copies of documents, you convert them into digital copies, soft copies, and PDFs, then it means that like you are digitizing some of the components of your business. And another further step towards more digitalization, if I can say, is it's digitalization itself. So it is the use of digital technologies to improve business processes. So what you can do is, like, let's suppose that you have a workflow, you can automate it. This is about digitalization. You can also use some data which you have collected throughout the your interaction with the customers, and then you can analyze it and you can understand the patterns there and the customer behavior. This is about digitalization. But what is digital transformation then? This is bigger than digitalization. It means that you are using digital technologies to fundamentally change the way an organization operates. It means that there has to be a fundamental change within the organization itself. So this will include creating new business model. So what will happen is, like previously, we were just using technology as a secondary tool for what we want to do. But right now we are asking we are asking the technology itself that, okay, what we can do and how we can do it. Is there a new business model for that? So this is basically about digital transformation, that we can change, for example, our business model, we can change the way customers interact with the organization. So we can do all of this. So this is about digital transformation. And it is very close to fintech, but fintech is about not only transforming something, but starting something in the digital realm itself. So fintech is a term which refers to financial technology, like you are from the day one, you are not transforming your manual processes or existing processes in digitally, but what you are doing is actually starting off your business as a technology based solution. So this is basically you can do with a wide range of technologies that are used to provide financial services. For example, online banking, digital banking. Now we also have open banking concept, which is far superior than even online banking. Open banking means like you are trying to do some decentralization and how can I say it, like disassemble the products and services into various small microservices and pieces. So that's how you are actually achieving more efficient and more cost-effective approach towards financialization of different things. Mobile payments, peer-to-peer lending is part of that. So you can see that like not only we will be talking about digital transformation, but we will be talking about fintech. That's why I might be using these terminologies interchangeably, but it doesn't mean that they are completely same. So when we are talking about digital transformation, it is for the existing processes, products, and services, that how you digitalize them, how the organization can fundamentally change the way they behave, and they can adopt to new business models. And when we talk about fintech, it's about starting your business, your new business model or revenue model or product or service, whatever it is, in a digital realm. And then you are actually uh, leveraging a lot on the advanced technology. So this is about fintech. So, but is there something about Islamic fintech? There is again a question that, does Islamic fintech exist? Oh, because the problem is some people just have the name Islamic, Muslim, or Sharia compliant for everything as a USP or as a marketing strategy. So does it mean that like fintech is also same? No, because again, just like we had Islamic finance and we are still having Islamic finance as an industry, fintech can also be Sharia compliant. So Islamic fintech is about developing and offering improved Sharia compliant financial products and services through the use of latest technology. But is it different from the conventional finance or other forms of financing, even is traditional Islamic finance? So yes. Why? Because first we have to basically ensure that the use of technology is Sharia compliant, first of all. So in traditional Islamic finance, we actually do not bother to see whether the technology itself is Sharia compliant or not. Why? Because the technology is used as a secondary tool. Number two, now the way products behave in traditional Islamic finance is completely changed in the fintech realm. So because of that, we have to see that like when you are transitioning your existing products or you are creating new products, for example, Mudaraba, digital or smart Mudaraba, for example. So will it behave according to the fiqhi Mudaraba as well? So we have to also ensure that the financial products and services should be Sharia compliant as well. And for that, we need a different, a comprehensive and a focused Sharia governance framework, including standards, parameters, review, and audit mechanisms, and risk management. Now, what are the core technologies for Islamic finance? You can see that like there are so many right now. When we are talking about fintech, so we have a lot of tools at our disposal. For example, mobility, through which we can offer digital and branchless banking and other financial services to increase financial inclusion, because usage of smartphones and mobiles is now very widespread. And sometimes there are some parameters and matrices which actually compare the financial inclusion with the use of mobile phone and smart contracts and smart mobile phones, and they say that like the financial inclusion can be increased. Artificial intelligence is one of the tool which we have seen. Open AI, for example, generative AI is very powerful. It can improve and expand credit offerings, insurance options, personal finance services, and regulatory software. For example, we can create RegTech structures based on artificial intelligence. IoT devices can be used for KYC, AML, etc., to gauge human behavior as well. Blockchain, again, is a very famous technology right now at the moment, which is a distributed ledger technology. So this can enhance transparency, public disclosure, and security. And it is a P2P network which can improve decentralization and disintermediation also. So which means that like in the financial realm, if you have disintermediation, then you can basically interact with the different stakeholders directly, which means that like people who have access of funds can directly interact with the people who are in need of that fund or in need of those funds. And then we have smart contracts and dApps, decentralized application. They can be built on blockchains, and these can be programmed according to your need. For example, you can create a complete Mudaraba solution through smart contracts and decentralized applications. And we can use big data and analytics to transform consumer data to provide value-added services to customers, enhance and improve products and services while identify and quantify the risk. And automation can also be done through that. And cloud computing is another service which provides data storage and micro utilities and productivity services in a very cost-effective manner. Now, if you look at the current adoption state of technology in Islamic finance, this chart is taken from the Global Islamic Fintech report created by Dinar Standard. So you can see that like big data and AI has a very high potential impact, can create a very huge impact in deposits, borrowing and lending, and treasury. But at the same time, you can also see that in treasury, the use of AI is very limited at the moment. So which means that there is a huge gap because it's a high potential and high impact area, but at the same time, the adoption is very low. Similarly, if you look at trade financing, so the adoption is again very low of AI and fintech, but at the same time, it is a high potential and huge impact area. Same goes for insurance, for example. So if you look at it, P2P financing is being used in borrowing and lending with high adoption. But other than that, we have either moderate adoption, low adoption, or very limited adoption. And the boxes basically show that there is a huge impact if we adopt those technologies in those areas. Now, if you look at the Islamic fintech framework, again, it has been taken from the Global Islamic Fintech Report. So on one side, you have customers like consumers. They can be high net worth individual, mass affluent people, low income people. So any range of customers and clients, even businesses and organizations and financial institutions can be customers as well. And they are connected with through technologies like AI, blockchain, tokenization, security, cloud computing services, and software as a services with different products and services. So you have social finance services like Waqf, Zakat, Sadaqah. You can also improve insurance like InsurTech and Takaful Tech. And you can also improve and utilize these technology to cater for the needs of consumers, be it individuals or organization in deposit and lending. For example, challenger banking, open banking, mortgages, personal finance, student finance, and on the wealth management side, you can use robo advisory, asset management, etc. And even in capital market like investment, trading, sukuk, digital assets can be used for different purposes. Now, if you look at actual global Islamic fintech markets and the regional dynamics, so currently the Islamic fintech market size for OIC countries in 2021 was estimated as almost $79 billion. This represents 0.83% of the current global fintech market size based on transaction volumes. But we'll see that like there is a huge upside because the Islamic fintech market size for OIC countries is projected to grow at almost 18% per annum, and it will reach to 179 billion by 2026. This is very favorable because if you look at the global fintech CAGR, it is only 13.5%, while Islamic fintech is growing at a much faster pace. And if you look at the top OIC fintech markets, so you can see that like Saudi Arabia stands first at $26 billion. Iran is $19.1 billion. Malaysia is 4.8 with along with UAE, and Turkey and Indonesia are also one of the top OIC countries. Now, if you look at the jurisdictional competition, or I would say like growth, then you can see that like there are top 20 countries. And interestingly, Nigeria has also been there, although like at the 19th number, but these are the figures for 2021. We have yet to see the figures, final figures for 2023 and 2022. And then Nigeria has also improved by 3 positions to secure a position in the top 20 countries. So if you look at it, it's very interesting to know that within the set of countries, 7 out of the top 10 are OIC countries, but there are some other countries outside the OIC, for example, UK, Singapore, and Hong Kong. And Nigeria, of course, like is in the top 20 countries, along with Turkey and Brunei, also catching up. And the most interesting hubs, the top ones are these one. If you see Malaysia, Saudi Arabia, Indonesia, United UAE, and UK, and their growth is good. But I'm not going to the details of this graph, but I would suggest you to read the Islamic FinTech report itself and understand these graphs and hubs of Islamic finance and how their approach can be translated and converted or localized for Nigerian market. And there are so many gaps and opportunities, particularly if you look at sub-Saharan Africa, where Nigeria lies. So you can see that like there is a huge potential because at this the thing is like the market penetration is very low at the moment, but so which means that there is a huge gap in alternative finance, capital market, digital assets, payments, raising funds, deposit and lending. All these categories actually are presenting a huge potential and a growth opportunity in Nigeria and sub-Saharan region and all over the place. Actually, right now, if you look at it, mostly MENA GCC is sort of like maturing. But other than that, you see South and Central Asia, North America, Sub-Saharan Africa, and MENA, other MENA regions, they are still catching up. Now, if you look at the ecosystem of Islamic fintech and actual market players and industry, I think that this is our third section, sorry. And so according to the sector, if you look at how many companies are there and how they are serving the purpose, so you can say that like in finance, for example, there are total 135 companies according to the database of Islamic FinTech report. And we have Save and Invest, 72 companies which are focusing on this area, Give and Protect, 18 companies, and Enablers are 16. So, and if you want to see the further big breakdown, then you can see that like there are majority of them are focusing on P2P crowdfunding, raising funds, and deposit and lending. But at the same time, capital markets, operations like back middle office and business intelligence, social finance like zakat, waqf, and sadaqat are the areas where we will have to see huge potential and growth opportunities. So we can focus on these areas as well. And for example, adoption of blockchain is also one of the areas where we have to see a lot of improvement and artificial intelligence. And if you look at the actual companies. So these are the companies, although like I can see that it might be very, very small for you. So, but the intention is not to highlight any specific company, but rather to show you that like that's how, and give you a visualization of how the Islamic fintech services landscape is expanding. So you have on one side customers and the enabling technologies, which are counted as 12. And in between, you have these products and companies which are offering different financial products. Now, about Sharia compliant Islamic fintechs, I think that that will be very much in very, very interesting area to explore, that how Islamic fintech companies think about Sharia compliant, Sharia governance framework, and what are their needs and requirements. So if you look at it, it is very interesting that there was a survey being done by the United Standards, And then they found out that majority of the Islamic fintech companies are not certified as Sharia compliant. I mean, like, I'm not saying that they are non-Sharia compliant, but they are not certified as well at the same time. So 23% of them are uncertified, 5% of them were in the process of obtaining certification, which is a very low and alarming percentage. And then 25% of them, they are also uncertified and they see that like they will seek certification in the future. But the problem is this shows an attitude. Although like it has been improved, like previously last year, it was 75% of the companies were interested in Sharia certification. They say, okay, yeah, it is important, but and now it has increased to 78%. But we have to understand that right now, the fintech companies are facing two main problems, or I could say like there are two main factors why they haven't achieved Sharia certification from the beginning. Number one is there is a cost of Sharia compliance and Sharia certification. I think we will have to actually address this issue. Why? Because even Sharia scholars have to understand the fintech space and the startup space at the same time. Uh, because most of the Sharia scholars have been working with banks, which are large entities, and because of that, their mindset is very traditional, and they only think about the banking and big financial institutions. But I think that it has to change because cost is a main factor for startups. Number two is sometimes those fintech companies think that if we are replicating a traditional Islamic finance product, then and it is already been certified by the Sharia scholars and the Islamic banks have been using it. So we do not have to actually have a Sharia compliance certification for that. But I must tell you that there is a lot in the details. Like they say that there is the devil is in the details. So because of that, I believe that uh, something can be easily lost in translation when you are picking up one Islamic product from the traditional space and then converting it into a complete digital experience. And I have seen from my experience that a lot has happened. Some fintech startup were upright Sharia non-compliant. When I told them that you are not Sharia compliant, they were surprised that how come it is true that we are not Sharia compliant. We are just replicating a traditional Islamic finance product, for example. So it happens, but I think that we have to understand from the industry perspective that this is very, very important, and I will be talking about it in some other slides as well. And second thing is about when they were asked about that, what do you think uh, about Sharia compliance? And fintechs like need to be considered as Islamic. So what are the attributes you think? So so they have a very mixed sentiment around the ongoing definition of Islamic fintech. 44% of industry participants believe that certification, declaration, nor audit isn't necessary. So like there is no Sharia audit needed, there is no certification needed, no declaration needed to be considered Islamic fintech. So I think that this is again a very dangerous mindset, and we have to think that how we can overcome it through awareness and knowledge sharing sessions, and how can we um, materialize the Sharia governance and Sharia audit objectives, because otherwise this industry will grow and the problem will become bigger and bigger, and it will be very difficult for us at a later stage to tackle the situation. Now, I think that most of the people, they are also fear in the space that if we adopt Sharia compliance, become Sharia compliant and Islamic, and then we have a Sharia board, then it means that like we will be very, very much restricted. So I think that it is important to highlight that, okay, what is the general Sharia approach towards Islamic, towards fintech, artificial intelligence, towards technology. So first of all, we have to consider these legal maxims that the basic principle about matters is permissibility until evidence indicates that it is forbidden. So Islam has a very unique approach where it says that like this sector or this area is prohibited. Other than that, you can do whatever you want and it will be Sharia compliant as long as your activities, your products or services or offerings do not fall under this area. And another thing is like we have to also consider that rather than basing our opinion and views on perception, we have to actually look at a thing that whether it is Sharia compliant or not, and we have to have a complete understanding of that. It happened in the blockchain and crypto space, and it I have been dealing it on day-to-day basis that so many people have based their uh, opinion, whether they are Sharia scholars, academicians, economic experts, Islamic finance experts, bankers, regulators, that they have a perception, and because of that, they say, oh, it is a scam, it's a fraud, it's not Sharia compliant, or it is Sharia compliant maybe on the other side. So I think that this is not a good approach. Rather, we have to have understanding based on the exact subject matter, and then only we can pass an opinion. And the principle in contracts and condition is permissibility and validity again. So by considering these legal maxims, what we need to do is like we will have to avoid all the major prohibitions. That's it. And if as long as your product, your offering, your service does not fall under major prohibitions or in fiqh, then it is Sharia compliant. And but there are some general and specific issues with the Sharia. I will be very quickly going through that because I understand that like my time is closing. So first of all, I would like to say that regulatory and legal uncertainty is a major factor as well for something to be Sharia compliant. Why? Because in Sharia, a lot of things depend, a lot of rulings and Sharia or fatwas, I would say, based upon the common practices, customary practices, and how can you establish, or we call it urf in fiqh terms. So how can you establish urf? Sometimes urf is established based on regulatory framework and legal framework. If the legal and regulatory framework is uncertain, then the urf cannot be established. If the urf cannot be established, then Sharia ruling cannot be easy to pass. So sometimes regulatory uncertainty can play a vital role in establishing and also because there are some legal maxims, Islamic qawaid al-fiqhiyya, which are about darar and mafsada. So how to avoid darar and mafsada is actually through or basically stop people from exploitative activities, etc., and give consumer protection is through regulations and legal framework. So again, because of that, I believe that these uncertainties play a very big role in creating Sharia issues in adoption of fintech. So I think that we have to overcome this. Number two is lack of Sharia expertise on the other side. Because again, what I said is like when you transfer something in either from the classical fiqh or from the traditional Islamic finance practices into a digital realm, you have to understand then how it will behave, what will be the conditions and terms and conditions and and requirements for a product or service. So I think that from there, like we need some Sharia scholars which are well versed also in technology. Data and privacy and security issues are also very, very pertinent because when we are exchanging data, the security, data privacy and security issue becomes very complex. So I think for fintechs especially, it is a big issue, and how to tackle it, we have to also consider it that how we are going to tackle it. And questionable business models, some fintech business models, such as like peer-to-peer lending, may be exploitative or unfair also. Now, this is a very big question about moral hazard and questionable business model. Why? Because some economists and Islamic economists and Sharia scholars also argue that fintech is nothing but a tool to to promote exploitative nature of traditional Islamic conventional finance. They say that like you are is still increasing debt in the economy. So whether debt creation itself is bad or not, and the fintech is being used to further accelerate it. So then can we use this tool? So I think that business models and moral hazard, wrong business model, questionable business model, and moral hazard has to be taken care of from the theoretical perspective. Because of course, I do understand the reservation that sometimes it is unfair. Financial inclusion means like more customers for debt, for example. So this should not be the case. So unfair, unjust sort of, I would say, practices, whether they are coming from the conventional finance or Islamic finance, should be stopped and should not be promoted through fintech. So I think this is something which we have to consider. And then there are some specific issues. For example, like when we are using artificial intelligence so you can basically use it for algorithmic trading. So these are just to give you a very practical example of some issues, but it doesn't mean that like these are the only problems. So like algorithmic trading, there is a concern that you can create gharar through that. Now, algorithms can handle not only data but transactions, and they can make their own decisions. So I think that this is something which is we have to check, because the speed trading can be done on nanosecond basis, which means that like trading can happen, and then how will you ensure the ownership transfer, and how will you ensure the other Islamic contracts conditions are being met? So this is very, very difficult, and if they are not met, then of course like it will not only invalidate the transaction and contract, but also it will increase the gharar both on both sides, not only specific gharar, but also systemic gharar in the ecosystem as well. So I think that we have to tackle it, because we do not want to promote a speculation only through algorithmic trading based on artificial intelligence. And automated advisory platforms, robo advisors, the potential for advising non-Sharia compliant investment again is like how you will take care of it. Because again, AI models are not being completely trained on Sharia and fiqh. So because of that, if you just set some parameters, okay, they can be easily fooled at the moment, if I can say, and they can overlook uh, prohibited elements within a transaction easily. So I think that we need to have a comprehensive solution based on for robo advisors, automated advisory platforms, to ensure that the Islamic principles and rulings are being implemented properly. Crypto assets, blockchain, and smart contracts is one of the sector where you see a lot of confusion, a lot of debate and discussion. Sometimes blockchain and smart contracts can be used for prohibited transactions as well. So we need to have like a comprehensive framework for Sharia compliance for crypto assets, blockchain, and smart contracts. Data driven and AI based decision making, again, it is part of algorithmic trading, automated advisory platform as well. So I think that we also need to ensure that the AI should not be used for discrimination, and also for the opacity of decision making processes, because sometimes it is not we do not really know that like how the decisions are being made through AI. It can happen, by the way. It's not a myth. For example, I can very quickly can give you an example that Facebook. I remember that there was a story that Facebook created two algorithms for negotiations for a transaction. So like these algorithms were created so that like they can communicate and negotiate among each other for a transaction, and then they do the transaction. So they start the negotiations. Initially they did it, but then afterwards what happened is like those algorithms created their own language, or I can say like they started communicating in a manner which were not understandable by human beings. So they initially, their creators, they thought that like it's a malfunctioning of those algorithms, but it was not. Later on, they discovered that those algorithms were able to create a new way for negotiations themselves. So now, what was that, and how they started doing transactions? It was not understandable by human brains, basically. So what I'm trying to say here is like opacity, discrimination can be done, and we as human may not have some control. So I think that for that, we need a stringent data privacy policy, secure technology, and also human interaction and intervention as well. So what are the best practices overall for Sharia compliance in fintech? I think that Sharia compliance certification is a must. Continuous monitoring should be done, and the community engagement is also important. Not only community means like all the stakeholders, regulators, legal lawyers, economists, academicians, Sharia scholars, and fintech players. All of them should be, and even the customers and clients should be engaged for this to promote Islamic fintech only. And then at the end, what is the way forward? I think that we need increased collaboration between Islamic finance institutions and fintech companies, because fintech companies, again, is startup. And I would say that most of our industry is traditional and driven towards big institutions. So like we need to also have like a collaboration between startup culture and fintechs and established institutions. And development of Sharia compliant frameworks and the guidelines are also very, very important, because I believe that regulatory bodies need to develop Sharia compliant frameworks. For example, IOFI, they are already working on crowdfunding platforms standard, and I think that they should also work on more and more standards for fintech products and services. Investment in research and development is I cannot stress much on it, but it is a must, because right now it's a new area, niche area, and we really need to educate people, spread awareness, and for that we need to have research and development and support from governments and policymaker. I think that this is something which we already seeing, but we have to see it more, because we need it more, because if the Islamic fintech is being developed, I think that we will have a conducive environment and more trust and confidence from all the stakeholders. So these are the sources which I take in the data from, and I think that I hope you like my presentation or you understand it. Now I can take any question and answer. We do have time. I basically hand over the floor to the moderators and organizers.
Have the capacity to give us the best. Without no time, I know that. So go ahead, Doctor. You have 20 minutes.
Okay, I have just 20 minutes. Normally, this is what you get when you have a prolific and erudite speaker like Dr. Habib speak before you. But it actually is a pleasure, it's an honor to be part of this session and to be engaged with such amazing group of audience. I followed the questions carefully. They are quite intelligent, quite deep. And with the little time, what I'll just try to do is maybe backtrack a bit on some of the discussions that Dr. Habib has made, and then walk us through. I may not be using slides. Maybe I will just share one or two, just to give the conversation a context and to also give the viewer something other than my face to hold on to. I'll start off by this notion around digital transformation, right? And the focus of my conversation with you guys is on how this transformation, the trend it's taking, and what implication holds for the Islamic finance markets. I'll be looking at it from both the supply perspective, in simple terms, how it has impact or it will impact on the quality of Islamic financial services that will be produced, that will be churned out, that will be dished out. And on the other hand, how these financial services are to be consumed. And we'll try to just do a bit of take a short cursory look on how this has evolved. Now, you have to bear with me. I don't have the liberty, given time, the constraint of time, to walk you through all the slides. So we might just have our entire conversation around one or two slides. If time permits, I'll bring on a couple of case studies on what is happening in the digital transformation space. that is akin to the world of Islamic finance and how that has, or how that is shaping currently these financial services, both on the consumption side as well as on the production side, and how it will continue to shape it, how we think it will continue to shape it for the foreseeable future. And I mentioned for whoever has had the chance to look through LinkedIn, I dropped my thoughts. And everything I'll be saying will be around these thoughts that, look, Islamic finance began gaining prominence at about the same time, simultaneously, that digital technology, advancement in digital technology became widespread. The rate of adoption picked up a surge, a pace that is unprecedented. And this combination holds a very, very positive, if leveraged well, implication for the for we consumers of Islamic financial services, as well as we, the suppliers or producers of Islamic financial services. Now, I take you all back very quickly to something Dr. Habib has also mentioned, a bit of a context, right? The background. Digital transformation did not evolve out of the blue, right? It is a function of an evolutionary process, which predates the era of the MasterCard. It dates back to the era of Telegram, when the first financial transactions were being made using Morse codes, down to the era of digitization, which Dr. Habib has quite explained, put in short words, but very clear picture to say, yes, digitization, digitalization, digital transformation are three related but different concepts, and each develops or sort of grow out of the other. It's like you have the teenage or the baby age of fintech, and then the teenage age, the toddler age of fintech, then to the teenage age of fintech, and where we are today and where we will likely be in the near future. So digitization itself is akin to transforming analog items into digital format, analog persons in digital format, analog process in digital format. The digitalization is building on this initial digitization to add a bit of a process, of a flow to it. And I'm going to cite some example here. When we look at digitalization, it began to surface itself at an era when we began to have a more computer-driven banking systems. So we have core banking platforms emerge as a result, the likes of the Terminus, the Finicles, all those sort of core banking system. For bankers, they will understand this better, that helps process accounting on the general ledger. All these are not things that the user or the customer, the banking customer, is familiar with. What the banking customer just knows is, gone are the days where I can only withdraw money or my check can only be honored in the branch that I have done this transaction, or it will take some days before I can actually clear checks. Why? Because the process have been done analog, manually. They have to cross-check. They have to manually look through all ledger entries before they're able to effect it. But with the age of digitalization, these things are being done by digital systems, all embedded in a system called core banking systems. Then we have the ERP systems, which is sort of the enterprise resource planning system. All companies today virtually have this. The CRM system, the customer relations or client relation management systems, with which today you can dial, you can email, you can reach out to your banking service providers, and it doesn't matter who is at the other side, you get response. Before now, you have to go into the branch, and when you go to the branch, you will be lucky if you found the same person who served you previously there. Otherwise, you have to start the process all over again. And as for the suppliers, you need to hire a whole lot of people To manage them, also, you need more people to manage them because they need to keep track of all complaints, all queries, and all issues that have been raised. Then the asset management system, the treasury management system, the risk management system, the underwriting system for insurance companies or TACAFO. So all these systems, we experienced a change in them in the early 90s down till this moment. But that has far grown into what we have today is the era of digital transformation. And this is about around the same time that Islamic banking, Islamic finance, Islamic capital market, TACAFO systems are coming about. They do not really witness much of the analog era. They do not really witness much of the digitization era, where all, at some point, the highest level of digitization in a bank or in a typical financial institution was a fax machine. In fact, before the fax machine, where they just transfer documents from one branch to the HQ or to the regional branch, it was just telegram messaging, right? To check, okay, does this person have this balance? Or can you confirm this person is who he said he is so we can transact with him? Putting all this, they never witnessed most of this. It's something that sort of, we just came in at a time. The Islamic financial services, most of these institutions came in at a time that, yes, digital transformation has got a peak. So you'll notice that if I pose a challenge, if I ask, do you know a bank that doesn't have a mobile app? Or do you know a bank that doesn't have a website? Because upon a time, banks do not have websites. Which Islamic bank can claim to say, yes, I existed at a time where there wasn't a website, where a website wasn't a thing? Very few of them. Majority actually came at this age of digital transformation. Now, at this point in time, you could perform transactions, check your balance, leave instructions, all in the digital realm. You don't have to go to the bank. You can do that whether via your web application or through the mobile application. Similar thing is happening in the Islamic capital market. So you find wealth managers giving access to their clients, digital access to their clients to view their balances, to top up their account, and to review their investment portfolios, and all this remotely. They can see how their investment portfolio is performing. They can even, at some point, but that's more of the advanced nature, they can at the same time request certain complications to their existing investment model. They can make inquiries remotely, right? And so the TACAFO platform, where you can file for claims. You don't have to go to the TACAFO company to file for claims. Remotely, using digital channels, you can file for claims. You can even buy a policy without having stepping out of your room or the confines of whatever locations that you are. That is the era of digital transformation, and that is what we witness today. Regulatory technology. This is also done. You can report, you can access data, though this is still something that hasn't quite developed so well. But yes, in local context, in emerging markets like Nigeria or developing countries like Nigeria, this hasn't quite picked up pace. But in other climes, it has significantly picked up pace, where a customer of a bank can actually make reports to the regulator, or the financial institutions can report directly to regulators on issues that bothers them by just simply using whether it's the app or web application or the mobile application. And they get response, they get their queries logged in as a ticket, and then they get follow-up messages, and they can see the process flow. Right. This again is the era we're living in now, digital transformation. But that is fast moving. And the last bit that I added there has to do with digital sukuk, which is a classical case. If time permits, I will like to share some light on how this is working, success story around this, but it's just about digitalizing the process of Sukuk issuance and Sukuk purchase and everything in between that issuance and its redemption. Be it you want to check performance, you want to trade it, you want to reassign it for another purpose, you want to activate certain clause or certain triggers that are embedded in this Sukuk before its redemption period. All these entire process has no manual element in it, and that is a digital Sukuk. And a more recent example, which I would hopefully with time I will be able to shed some light on, has to do with the Sukuk pre-haftin during the COVID-19 period, at the height of the COVID-19 period, the Malaysia's first digital Sukuk. And this brought us to the era of Fintech. Now, mind you, my timeline is around the concept, the evolution of the concept of digital transformation. This has embedded in it the evolution or the advancement in technology. We have to bear that in mind. As technology grows, people or institutions, entities are able to leverage this advancement in technology to deepen their digital transformation. And at some point, this became something that is outside, that went beyond the territory or the confine of financial institutions alone. Technology companies began to realize certain capabilities that they could do that has to do with finance, but does not necessarily have to do with financial institutions. And this caused a bit of worry for regulators, but most regulators across the globe were very quick and fast to jump on this and come up with regulations that accommodate both these technology providers as well as the financial service providers. And you have things or concepts around tech fins and fintech, right? Tech fins, you have example of tech fin would be the likes of Apple. Apple has a digital payment wallet or digital wallet. Apple is not a financial service company. Apple is a technology company. Google has its own. Samsung has its own. These are not financial institutions. They are technology institutions, right? But they realize with the advancement in technology that they could actually do this, and they have the user base. They can solve a problem for their users, and this sort of grew into something else that we all live by today and we all enjoy today. The fintech on around the same space on digital payment will be the likes of M-Pesa in Kenya and a host of others, right? Paystack, OP. These are, well, not necessarily financial companies from the get-go, but they are companies that see the synergy between finance and technology, and they're able to assemble a team around a problem to provide a solution. And yes, they are in existence. And then you have banks or financial institutions who are predominantly, their business is finance, doing financial intermediation between the surplus unit and the deficit unit. And in the process, they realize, okay, we're going to need technology to facilitate some of these things. And they're able to partner or recruit or set up their own technology companies to serve this purpose. And this led to the era or the growth of fintech as a universe under which you have the aspect of digital wallets and payments. You have the aspect of robo-advisory, where you use technology to provide financial advisory services for clients that are interested in certain investments. the enhanced capability there has a lot to do with the removal of subjectivity of the individual, removal of certain inadequacies that is associated or inefficiencies that is associated with the human mind, and ability to process large amount of information in a short amount of time with a degree of accuracy that would yield the desired return or result for the investor. So that went on. Then we saw the rise of crowdfunding platforms, right, where we're able to leverage technology to enable us pull funds from a whole lot of people for a particular cause or for a transaction or for a venture or for an endeavor. Then we also saw how we're able to use technology to facilitate peer-to-peer financing or peer-to-peer lending, although the preferred term in the Islamic finance world will be peer-to-peer financing, because lending is akin to loan, which is interest-bearing. But financing is not interest-bearing. Then we have investment platforms, and this is something that is growing in prominence now, both at the corporate entity level as well as at the government level. So you have corporate entities set up investment platform that is mostly digital in nature, and it stands on its own. It's not building off a process flow of a particular financial institution. No, it is a solution on its own that has been able to carve its own niche and has its own customer base. Then you have digital asset platforms and cryptocurrency platforms that emerge at the later side of this, when technologies like the blockchain became more prominent and smart contracts became much more matured and developed. And you have payments systems, the ACH systems that became much more secure to facilitate peer-to-peer transactions, cross-border wiring of funds, and things became much more robust. So that led to the era of fintech. But it didn't stop there. Now we are looking at an era that has a much more enhanced capabilities. This is a field that is rising now in prominence, where we're seeing how entities are able to take advantage of the latest, or would I say, the new peak of technological advancements to provide financial services or to enhance existing financial services. So we see the rise of artificial intelligence powered, AI powered chatbots or virtual assistants, where I will cite some instances, though this is not something that is very prominent these days, but I give you an example. Upon a time, not too long ago, right? Even not too long, I wouldn't want to say last week, I was at the bank branch. This is a branch, a bank that I've had account with them for a very long time, and I haven't really looked into it. So I thought of, I knew my account has gone into dormancy, and I needed to reactivate this bank account since 2012. And it's an Islamic bank here in Nigeria. I'm going to use this example just to give us a bit of context of how this AI chatbot. And I thought, okay, I went on the website to see, okay, is there a way I can get information on how to go about this? It's not so easy to do so. I didn't have the time. I just wanted things fast. I'm a regular consumer, or would I say, advanced tech consumer. So I wouldn't want, first, I'm impatient. I need my information. I need it crisp, clear, what I need to do. 1, 2, 3, 4, I move on. I do not have time to read an epistle or to listen. So I wish they had a chatbot that I could just specifically, this is what I need, and give me what response, 1, 2, 3. I didn't get that. I had to go to the bank, to the bank's branch, I think the HQ. And on getting there, I met the attendants. It was towards the evening. Trust me, they were already tired. The response I received I understand coming from banking background, but for me, for a customer, I don't think for a Gen Z, for instance, that bank is already a write-off. They won't even have the patience to wait to ask, to detail the patience of passing me from one person to another person, asking me questions that they should already have known, just keying by typing in my account number. And all this process, which I felt, hey, if there was an AI powered assistant, this AI powered assistant has the ability to process a whole lot of information in short amount of time. It's just going to tell me what I need to do and I'll be on my way. But that is not the case. Flip side, another market in the Middle East, a bank, they recently launched their own AI powered chatbot. It's called Ava. The name is quite interesting. And this chatbot, I wanted to open an account. Okay. It asked me, do you have XYZ? Yes. What about this? No. What about that? Yes. What about this? No. Okay, well, these are the processes you need to take. And the chatbot, it was conversational. The chatbot provided me everything and said, the next thing, I'll send you an email in case you forgot, or just to be sure that you're able to, fulfill this requirement. And that was simple. That was straightforward. This is the direction that we are headed now. Islamic finance, we soon begin to witness a situation or a condition where this artificial intelligence tools or engine will be embedded in our core financial services. And it is a plus because our system is a bit, it's not mainstream yet. So it has its own peculiarities, which if we are to get critical mass, we need to be able to communicate these peculiarities at any point in time, middle of the night or during the day or in the evening, with certain degree of professionalism, certain degree of accuracy, certain degree of efficiency. We should be able to incorporate latest information all at once, but this is difficult if we're to embed it in one human being or in a group of human beings. Many things will happen, but AI make that a lot much easier, much more efficient, and much more cost effective. Similar is the advanced risk assessment. I understand my time is limited. Is the AI-powered risk assessment engines that we're witnessing, we're seeing in the banking sector today. We're also seeing the same thing being employed in the investment or the Islamic capital market system, the wealth management sector, as well as the takaful sector when it comes to underwriting a customer or setting up an insurance policy. This risk assessment, gone are the days where the risk, as we do in risk management, we collect certain information from you about you. Then we have to rely on other known sources, right? Other prominent sources. If these sources do not have information about you, it is a problem. But hey, we live in an era where almost everyone has a digital footprint. What if we can leverage this digital footprint, whether it's social media or whatever source of information, put this information together, analyze them, identify patterns, and evaluate the risk assessment based on these patterns. Add more flesh to it. Certainly, we will be able to underwrite faster, more efficiently, because these AI tools, they are able to do this in nanoseconds. They are able to do this at a minimized number of energy, time, and with a reasonable degree of accuracy. So putting all this together, we're seeing this coming up and coming up in an interesting fashion. The Islamic finance world is picking up in this, on this concept or this level of advanced data, digital transformation, and fintech stage. Then we see fraud detection systems, algorithmic trading coming up as well, and smart contract, all leveraging artificial intelligence. Now, just in little time, I will share two case studies. I think I have shared one, but I'll share two particular case studies. Then I can go to seeing how in the local context, in the Nigerian context, how this has sort of, how we see this happening. First of all, where we are and how we can potentially incorporate this, or how artificial intelligence and fintech can actually enhance the quality of the service that we churn out as Islamic financial institutions. On one hand, on the other hand, how we're able to satisfy our customers with regards to these services powered by these advanced technologies. Now, here is an example, right? A particular case study. Shariah. Shariah is a virtual assistant, an AI-powered virtual assistant. Of course, it is introduced, it is created, developed by State Bank of India, right? And Shariah, just a bit of a background. This is a bank that is considered among the top 50 global banks. There are several banks that have similar things, but I want to use the particular case of Shariah because there's widely available data on its performance, right? And this is a bank that has that operates out of 26 countries and more, and it's still counting. It has over 25,000 branches and nearly 70,000 ATM points, right? The annual revenue is upward of $60 billion. Number of active customers, 7 million. Now, think about this. To service these 70 million active customers, and active customers here is defined by customers that check their balance or do transaction at least once in 30 days. At least once in 30 days. So you have 70 million of them. How do you manage all these individuals? How do you assess or cross-pollinate their data to reach a decision? How do you perform risk assessment optimally? And how do you serve them without having to delay them or without having to hire a huge number of people that will build up your costs, that will then make the cost or the pricing of your services to them high? How do you perform basic tasks without getting overwhelmed? How do you detect fraud? Or how do you ensure that fraud is not being committed, managing this huge number of people? This is where AI comes in. And the part that I just want to focus in the application of AI is just the customer relation, not the fraud detection, not the risk assessment, not the investment services, no, just the customer service. And I tell you, within a month, in its first month, this Shariah, the AI-powered virtual assistants, was able to serve 19 million customers in its first month. No individual can do this. To do this, you would need probably 10 million, or no, that may be an exaggerated figure. Within a month, if you assume, you do the math, if one person is to serve 100 people in a month, that's considered good. But let's say one person serves 1,000 persons in a month, you still will not get. Calculate the number of human beings that you will need and the time that they will be doing it. You still will not get this degree of efficiency. Mind you, this is a bank that operates across 26 countries. I can't imagine time zones that this bank will be operating across. But hey, how many human beings and how many shifts do you want to organize to be able to cater for all this? Let's assume you have 25,000 branches, and each of these branches has a team of 10 or a team of 100 to service this 70 million active customers. Well, the question would be, think about the cost, think about the space, think about the risk involved, think about the information security, think about the data accuracy, and also many things involved in this. But hey, you have just implemented an AI, a software, and this is delivering 19 million, serving 19 million people, reducing the average time to serve a customer from 7 minutes to 2.5 seconds. From 7 minutes to 2.5 seconds. That is significant leap or significant progress. In terms of efficiency, the proportion is immeasurable. See, this same engine would interact with 10,000 individuals in 1 second. This is about 25% of Google's capability, because Google has a capability from Google source that you have, that it's able to process about 40,000, 43,000 thereabout requests per second. 10,000. How many human beings? What degree of it? How possible? So these are ways AI is enhancing, and we can continue going on and on how well it has served this company. But this is just a simple case study as to how leveraging artificial intelligence helps improve efficiency, help improve customer satisfaction, and help gain more revenue. And truly, this same virtual assistant on its own is able to rake in, as claimed, about $11 million in revenue through upselling and cross-selling services. And it's not just about serving, it's also about out-serving the customer. It's also about the customer knowing that should I wake up in the middle of the night, I won't get an issue of, okay, this is off banking hours. Well, banks do have staff that work 24 hours through shift, but at the same time, as a customer, I will know that the same level of efficiency in response that I get during the daytime is the same thing I'll get during the nighttime. That night fatigue or hangover fatigue that is akin to individual will not be there. And the efficiency I get from talking to a male is the same efficiency I get from talking, may not be the same efficiency I get from talking to a female. And the same thing, vice versa, it goes, right? But with this machine, everything goes very smooth, and you don't have to worry about those nuanced differences. For indeed, it matters to some users, some customers. This is one of the two that I mentioned. Here is another one. This Sukuk Prihatin that I did mention. So at the height of the COVID in 2020, when nations were looking around, some are dashing to IMF, some to World Bank, trying to raise funds to cushion the economic effect of that came along with the COVID-19 and the lockdown and everything. One of the innovative moves by Malaysia is to take advantage of Islamic finance and technology. Came up with something that they call Sukuk Prihatin, digital Sukuk. It is the first of its kind in Malaysia at the time. And it is meant to be a 2-year Sukuk to raise money, to provide palliatives, and to also provide certain economic, to restore certain infrastructure, to secure drugs, basically to help reject the economy or to sustain the economy through the pandemic period. And this Sukuk, digitally, gone are the days, or it's still happening in the emerging market, most of them, that you want to purchase bond or Sukuk, you have to go through a broker, and you have to go through, in some cases where you don't have to, you need to go visit a bank branch, you need to fill up some forms, you need to do a whole lot, which these days, a subscriber would need a significant amount of incentive to be able to do this. Most of them would not want by in any chance to have to, unless it is necessary or it is very rewarding, then they will do this. And this always impacts the level of subscription, especially at the retail level. At the institutional level, because most of these institutions, they are owned by government, or they have some certain degree of control, and by regulation, you need to hold certain assets in certain ways. So they they naturally have that inclination to go for this sort of sukuk. But if you remove those factors, chances are the way it's been done may not really be encouraging, right? But this time around, this sukuk was issued digitally using a digital platform. It has embedded in it charitable elements that, hey, you can forfeit part of your profit for the government, you get tax holiday as a result, or some tax incentive is in place. And if you want, you can also give up your principal to support the economy, to support the nation. And all this was possible, packaged, designed in digital form, and then dished out through about 27 local banks, through the digital channels of these banks. And all you need to do, you don't need to download a new application or no. The existing digital infrastructure that they had, leveraging the bank, all they did was put it on the app through their bank mobile app, which today it is difficult to find a bank that doesn't have a mobile app, right? And you subscribe for your sukuk, the bank already has the details. There isn't need for much of the KYC or hassle through the process. It was so nice. It's a wonderful initiative. And that yielded very good results, that it became in a very short period of time, it was oversubscribed. And they raised more than the amount that they required. They had to even extend it a bit. And they had a good balance of subscribers. Normally you'd have the institutional investors subscribe, but this time around you have the average man on the street, because it's digital. So they denominated, the minimum denomination was around 500 ringgit, something that anyone who has some savings in a small piggy bank can afford. And they don't need to worry about the cost of printing materials and then the logistics around it and whatnot. No, it's all in one digital platform. It's cheaper, it's much more efficient. The moment you're subscribing, you get your data near real time, you know who did what, and the return, you don't need to worry about, okay, if I'm an investor and I invest in this sukuk now, how do I manage how do I know the performance of the sukuk? No, you just need to go through the app as well. You get your information near real time. You wake up in the middle of the night, you don't need to call your broker to know what's happening. You just go to your mobile application. You see your balance, you see the performance, you have queries, drop it there, and then you get a response. Now, this is a classic case study of how digital transformation has impact, coupled with Islamic finance principle, is impacting change in the economy on the macro level. And on the micro level, it's also improving the financial welfare of individuals, whether you want to look at it from the financial inclusion perspective with regards to access, or financial inclusion perspective with regards to deepening. It's all encompassing. And thanks to what? To the synchrony between these two emerging concepts, Islamic finance and digital technology. I will stop here for questioning, if at all, but if I would add any other thing, this sukuk particularly has, again, multiple awards just for this initiative, of course, there are some before then, but for the world of Islamic finance, putting this through the lens of emerging markets, it is quite innovative and it is impactful, especially given the rate of adoption of technology. We have more smartphones in the hands of our people today than we ever did before. We have more internet penetration in the hands of our people today than we ever had before. We had people understanding how technology works from a much younger age than it used to be in the olden days, or it used to be in the past. All these factors put together are things that I think we could leverage to deepen Islamic finance, deepen the uptake of Islamic financial services, at the same time deepen or enhance the delivery of Islamic financial services. If the moderator would just please allow me to talk a bit with regards to, say, Nigeria, since this is where this conference is happening, and Nigeria is a country in sub-Saharan Africa that is emerging very well when it's come to digital activities, especially in the financial sector. There are a lot of positives or implications that fintech and artificial intelligence has for the growth of the economy in general at the macro level, and also for the economic well-being of the individual at the micro level. And I'll highlight a few of them and take a pause. Then maybe in a question and answer session, we can have a deeper dive into it. And we can also talk about the risk that are involved as well. However, time is not on our side, so I'll just keep it short. Now, we talked about banking. I'll look at banking, and I'll just cite one example. These advanced technologies can help us improve the quality of service that we offer, as at how we offer on how we offer them, as at when we offer them, because our customers these days, they want it whenever they want it. Upon a time, to get your money out of the bank, you have to go to the bank, you have to travel down to the bank, and it has to be during work hours. Later on, the invention of the ATM machine and its proliferation changed the narrative for us, such that we don't need to take a break. We don't need to bother our managers or our HRs just to get a time off during work hours to go conduct bank transaction, simple bank transaction, like even checking our bank statement or our account balance. These days, or after a while, we just need to, we know that once the bank is closed, banking is not closed because we have ATM machines. We drive by the ATM machine, withdraw. We don't even have to go to our bank's ATM machine. We can go to the closest machine around us and then make that withdrawal. That is some significant progress. Most countries in the developing world, including Nigeria, has advanced to that stage. Although this advancement is mostly clustered around the urban areas, it's still largely limited in rural areas. But be that as it may, it's still a progress. Then we move on to conducting transactions on the go, whereas the time and the place factor became segmented. We're not bound by the place of the ATM machine in order to take money to make payments anymore. We're not bound by the place of the ATM machine to check our account balance. No, that mobile phone, the mobile application, the web application, remove that. So wherever we may be, at whatever time that we find convenient, we can perform these transactions. Now, that is a higher level of progress. However, where we are today, we are yet to be able to conduct certain transactions without having gone to the bank. We need to learn to reduce so. And I look forward to a future where rather than seeing more bank branches, we'll be having more convenience centers where most of what I as a customer would do, and I give you the instance of what has happened to me with the bank last week. I should just go up on the bank mobile application. And I'm not talking about self-service this time around. I'm talking about conversational service. I dial up and I get this artificial intelligence machine or virtual assistant. I communicate in whatever language I find comfortable. And this machine delivers what I need, crisp and with the latest information. I forgot to add, I looked up the board while waiting for them to respond to me. And you know this board that used to be in the banks where they tell you the foreign exchange rates, and then they tell you their investment rates, and then they tell you other bit of information that has to do with the numbers. So I noticed that the board perhaps has a problem because it's not showing very clearly. I think it's electrical. But then when I asked a simple question around a term deposit rate. This person does not have the latest information, the person responding to me. And I think my time is up, but I'll complete this story. If it were to be a virtual assistant, it would be a lot faster, it would be quicker, it would be more accurate. Investments, wealth management, same thing applies. Leveraging artificial intelligence and machine learning algorithm can certainly help us improve how we're able to access this information and to what extent we can deepen the service that we provide people. So goes in the Takaful sector, particularly when it comes to underwriting a Takaful policy, and also when it comes to claims management. And this is where I will rest my case. Thank you very much for your time. I'll happily take questions.
All right, thank you so much, Doctor, for that. I will have not stopped you, but time is not on our side. I know you have a lot to dish to the audience today, but hey, like you said, like you used to say, let's meet in the conference and have wonderful conversation. I'm feeling also all this your stories that you've not been able to give. Definitely we would be waiting to hear them. So thank you so much for that. But I would like to just take two or three things to make sure before we go to the question and answer. I mean, you've mentioned a lot of things. I mean, a lot to digest. And I believe that opportunities for whoever is smart enough will have already been citing the opportunities and noting them down. And I mean, entrepreneurs that I know will start drafting how they can actually develop solutions. These are the things that we need to do to make our economy great and to shine what Islamic finance is all about. I believe this is the way to move, and that is why this topic was very, very important for us to bring to you. And we are going to conclude this conversation in the conference. So you've mentioned one thing I just want us to know, the history of digitalization, which Dr. Farrukh also mentioned, but you went in deep to give us, some narrative, some examples, and we thank you for that. And also, what actually struck me is when you talked about the digital footprint. I mean, if we could just look at the revolution, it's so impressive. And I believe all of us in Islamic finance should be able to imbibe the same and let Islamic finance, talk to the technological advancements that we have. So with this, I would like to open the line for question and answer. So Mr. Fumbi, over to you. Do you have any question in the chat box for Doctor? Anyone? I know it's a little bit advanced anyway. Yeah, we have one. Ziz Planet
We have
Solution.
one hand raised up from Ziz Planet. Let me give a
Please
permission.
go straight to the question.
Okay, you can unmute yourself and ask your question now, Ziz Planet.
Thank you very much. Assalamu alaikum. That's well, insightful session. So I would just like to ask, you've given different use cases, and I think they are very apt. But in terms of, I had the experience of, visiting India recently, and I saw how populated they were. I was in Bangalore, and from their app, if you want to even book a ride, you will see Keke Napep, you will see Okada, you will see different kind of category based on the price. Everywhere is well digitized, even with the highly, population. So in kind of that kind of example, trying to bring it down to Nigeria, where we have a huge informal ecosystem, how are you able to leverage technology, just like the use case you gave with the state of India, where you have a highly informal ecosystem? How are you able to leverage technology to address, to provide customer support and to also enhance the experience? Thank you very much.
Thank you so much. Dr. Guayed.
Okay, thank you for that question. Certainly, you're right, and you brought a very good reference point. So I see Bangalore as the major city in the state of Karnataka, in India, and the population is similar to, not up to Lagos, but something around that size, about 12 million people in the city. But yet you would agree with me that they are able to leverage technology to serve their people. It's about the most efficient way to do so. Otherwise, you need much more manpower to deliver a fraction of what technology is able to deliver today. The question is on how. It's all about innovation. It's about identifying the problem and trying to use technology to provide solution where the solution is available, and particularly where there is a very good business case associated. You'll be very fortunate. In the case of Nigeria, I must highlight that, yes, there may be a limitation with regards to implementing certain technology, particularly the advanced technology. However, if one is able to surmount or to grow beyond this limitation, the reward is enormous. So I'd say leveraging advanced technology, say artificial intelligence, for instance, on your CRM tool, that is one. On your client relationship management system, leveraging AI in that would save you a ton. Then leveraging artificial intelligence for your risk assessment or risk management engines will save you a whole lot more in terms of time it takes to risk assess and serve. Leveraging AI, artificial intelligence, into your fraud detection system will not only save you the time, but it will also increase your accuracy and reduce the fraud events or fraud occurrence on your system, especially in the financial sector, because you'll be able to identify patterns faster, and you'll be able to, through predefined rules, you'll be able to act even before you know it. And your accuracy of action will be very, very high, such that unlike what we used to have before, why rule-based fraud detection systems are not very efficient is because there's a high case of false negatives, where or false positives rather. A transaction that's seemingly fraudulent, we stop it, but that transaction is actually not fraudulent. And once we stop that transaction, what happened is we have delayed, we have hurt the customer experience, and we have lost income as a financial institution. So that is the downside of it. But today, with these advanced technology systems, we're able to process these things faster with a higher degree of accuracy. The false positives became very, very low, nearly negligible rate. And this has these are ways I believe we can enhance the financial services in terms of access, in terms of cost as well, because you do not need huge space anymore. You do not need a huge number of people anymore. You just need a system and a few people that understand the system and can manage this system. So that brings your cost to income ratio quite low, and your pricing will be low, and that would impact on your customer base through better affordability. And hopefully that would even make you much more competitive in the market. I hope this does shed some light on the question.
I hope so. Anyway, we don't have that luxury of time for confirmation and everything. I think we should just take one more question, then we'll go straight to the closing remarks. This has been so much to take in, and I believe that, I mean, for all of us, we need to actually up our game and make sure that we do the right thing. So let's just take one more question, Mr. Fumbi, and we move to the closing remarks.
Okay, we actually have 3 hands up. We have
Just
Ogun Shakin Moje.
Just choose randomly.
Okay, so Ogun Shakin, you can unmute yourself and ask your question.
Please, you have to be fast and.
Thank you for the insightful lecture. My question is that what is the efforts that is ongoing in order to our incoming generation? What's the plan for them, most especially some of them that has this tech in their blood, in order to at least up them into the Islamic ecosystem and groom them to be able to serve in this capacity? What are the efforts that we think we can, or is there any effort that's ongoing, or do we need to start planning on how to onboard this into the system so that the oncoming brothers and sisters can be put into this particular line and assist Islamic finance in the future? Assalamu alaikum.
Opportunities.
Wa alaikum assalam.
Go ahead.
Yes, there are opportunities. In fact, the opportunity is enormous because this is an industry that is still evolving. As for the efforts that are ongoing, quite honestly, there are a number of efforts, but most of these efforts, why you perhaps wouldn't have heard of them or seen them, is because they are largely individual efforts. Like Dr. Habib mentioned, he and his company, they are doing one. We at Islamic Finance Chamber, we are doing another one. The organizers of this conference is doing one, and this is a major one. And there are several others, but you see, these are pockets of efforts, which at this stage, it takes the individual to seek rather than wait to receive. Over time, we're hopeful that the regulators would see light and some of their in-house planning will begin to come into fruition, that would have institutions that would drive support for more human capital development that will bring on these younger ones that you mentioned into the fold. This is something that I very much believe will happen in the near future, not too distant from now.
Right, so I think that will be all for the questions. I know that you have a lot to actually ask, but do us a favor by, messaging us, maybe emailing us through our channels, and also if you are privileged to attend the conference coming up November 14th and 15th at Transcorp Youth in Abuja, that would be so great because this wonderful doctors would definitely be on board. So in that regard, I think we have come to the close. But before we actually draw the curtain for today, I would like to call up. I think if Dr. Yao is on the call rather, for a closing remark. Then I will now call on the convener head to give us the final closing remark. So if the doctor is in the call, Mr. Fumbi, can you do well by unmuting him, giving him...
Can Dr. Yao please help identify himself in the group chat, because I can't seem to, I'm in the chat box, so that I can give him permission to speak. Thank you.
Okay, all right. I know you mentioned something to me, but it's fine. Maybe he has a lot of reservation, and he will definitely be pushing them out later on. We have series of these conferences, of these webinars coming up. We are going to have one still coming up next 2 weekends. I think on the 23rd of this month. That will be on Sukuk, and definitely you want to attend that too, because we have wonderful personalities attending that. So go on the website, isif.org, register for the conference, go on the webinar tab, register for the webinars coming up. Then also there's also an opportunity for experts to vote, because we have an award is coming up, definitely. Which you can actually get that actually on the website. So with that, I think let me give Dr. Farrukh to actually say some few words. Then I will allow Dr. Mustapha to also say some few words. Then the convener will actually close for today. Dr. Farrukh, become yourself and go ahead.
Jazakallah khairan. Thank you so much, everyone, for attending this webinar, and I am honored to have contributed in this webinar. It's an honor to meet you guys, meet you. Jazakallah khair. And I'm thankful to Brother Mudathir and his whole team, the organizers, etc. I'm looking forward to participate in ISIP, inshallah. Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum assalam wa rahmatullahi wa barakatuh. Thank you so much, Doctor, for creating time for us and to attending this wonderful webinar. Dr. Mustapha Ishaq, please go ahead with some for your words.
Okay. Again, towing the line of Dr. Habib, it's really wonderful sharing with everyone on this platform. But most importantly, it's gratifying being part of this industry development engagement, be it the conference or the pre-conference webinar. I want to believe that this effort would further drive the industry, the Islamic finance industry, not just that of Nigeria, but that of Africa in the right direction. And like I said earlier on, that point of intersection between the time Islamic finance is gaining prominence and technology, digital technology itself, advancements in digital technology is gaining a surge in its adoption, presents a very, very strong and positive implication for we, the consumers of Islamic finance, or consumers who are inclined to the halal way or halal life or halal transaction. And it's something that I really look forward to seeing financial service providers leverage it to offer the financial service consumers at a much more better, larger scale and improved quality. This is it for me. Thank you very much, Brother Mudathir. It's a pleasure sharing with you guys, and it's a pleasure being here.
All right. I think we are now at the end of today's wonderful webinar. Thank you so much, all participants, for joining. I mean, creating time from your leisure time this weekend. Some of you are actually on the go listening to this word for word. One thing I want to say is that everything you've heard today, try to digest. You might not be able to digest all, but there are a lot of things to actually bring out from what they've actually touched on, and it serves as opportunity for us all. I mean, in the halal industry, and also to, foster Islamic finance in Nigeria and Africa. So thank you so much. I will have, I think, the head of the convener, Ed, has actually dropped up now. Maybe the network is not actually good, but I would like to close with this. Try as much as possible to get yourself involved in Islamic finance now. Definitely is it's still new, I must say, but it's the earlier, the better. So Jazakumullah khairan to you all. Thank you so much for joining. And we will see you on the 23rd for another webinar, wonderful webinar coming up. Endeavor to share, endeavor to register. That would be so interesting also, as you have found this wonderfully interesting. So thank you so much. Thank you so much, Doctor. Really appreciate it. Thank you so much, all. Bye for now. Thank you.
Thank you and goodbye.